This is Eric Muathe, Muathe.com. It is March 12th, 2020, and we're seeing the market staging a big down day here, with the markets down about 8 to 9% as far as the general markets are concerned, and this has been pretty much across the globe. Now, as the market is making this push to fresh lows, one thing I've been talking about today in a couple of videos, all with the same theme, is be on the lookout for a major reversal from a day-to-day perspective. The reason why I keep saying this, and I've been saying this all day, is because I see this emerging look where, if, for example, if we take a look at the S&P 500 from the hourly standpoint, and here I am using RSI 26, we can see that the markets are, yes, moving to fresh daily lows, as we can see here. And let's capture the mood of the market, down about 9 to 8.5% down for the day, big down day. And we can see here, even as the market is crashing, no, let me not say crashing, but moving to fresh lows, we can see that this is showing ever so slightly support around that 30.9 level of the S&P 500 RSI. So that positive divergence, if it holds, is gonna set the stage for a massive reversal, probably in the magnitude of a 10% up day. Anywhere from 5% to 10 to 12% up day is very likely in this market. Keep in mind, if we take a look at the 5-minute chart, and again here on the 5-minute window, why am I using the 5-minute window? Is because the VIX is trading at very high price levels. You can see here the VIX trading in the, let's call it, lower 70s at about 73. What that means is that the small time frames are controlling, and if the small time frames are controlling, then we give a lot of weight to our decisions as far as the 5-minute window is concerned. So here on the 5-minute window, it is very important to understand what the market is doing. Yes, we are seeing this down day, but as the market is attempting to make new lows here, you'll notice that the VIX, the S&P 500 is showing improvement on the RSI. This improvement on the RSI is coming while the S&P 500 is holding its RSI above 38.2. Now, what that basically means is that this is the best positive divergence, and that is telling me that be on the lookout day to day, hour to hour, that this market is going to stage a fantastic reversal to the upside based on what I am seeing here. So if you're short, you gotta be aware that the next swing trade, remember guys, in 2008 is when we saw some of the biggest market down days, and yet it was also in 2008 where we saw the biggest stock market up days, as you can see here. All of this were in the 2008-2009 bear market. The Dow was up twice more than 10%, even as the market was trading net to new lows. So if you're short the market, beware. Snapback rallies tend to be very aggressive. Eric Muathe, Muathe.com. Clearly they wanted to have the general public aware that the market was down 10%. I would assume this is the reason for this drop here. Just close to 10%. Let's take a look at what the 5-minute looks like at the end of the session. I would assume it's not as, okay, so we are still seeing what could end up being positive divergence. On the 5-minute, RSI setting of 26. Let's take a look here at the S&P 500 at the close. Again, we closed above 30.9, which could also be still the formation of positive divergence. So I would say if I was short, the market, this is not the look I would like. It really does bring the possibility of a gap up in the market, and a huge one at that. Gap up, huge gap up. And the reverse is also true. If the market opens lower, breaks below this positive divergence line, then we get a gap down of major size to the downside. If we break that positive divergence line, and here we can see on the 5-minute window, again, yes, we are making a move to fresh 52-week lows. RSI is still showing possibility of support around the 38.2 level, but if we break below that line, expect a big gap down at the open. And at the same time, if this line holds, as I would speculate would make more sense, if this line holds, then expect at the open tomorrow, which would be a Friday, a gap up of substantial size. Again, we're talking about another couple thousand points to the upside or to the downside, with the make or break of these lines that I show here, with potential positive divergence or break below those lines. One more time, a final look at the market. So here is the conclusion of the very next day's action. You can see that the markets did close at about 9% higher to the upside. And to be clear, this is for March 13th, 2020, Friday the 13th. And we can see that the market did close with record closing price gains for the day. Remember that positive divergence line that I was talking about yesterday? Well, it did come into play today. In fact, the entire day the market was coming and tagging this line on the downside, finding support when it needed to at the lows of the session today, and also finding resistance throughout the course of today until the last hour or the last 30 minutes or so, when the market staged a Swedge breakout, another one of my concepts, for a climatic finish into the end of the session and end of the week. And today we'll go into history as being the biggest point gain for the general market. The Dow was up a record 1985 points at the end of today's session alone. That is good for about a 9.36% gain. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ERCESSION.